Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates and 10-year note yields stuck in the middle of that May range. May was a crazy month. We saw yields get north of 310. We saw them get back down below 280, in a pretty quick fashion. And then we've seen them kind of creep back up since late last week. Obviously, the jobs number had a lot to do with that, but we've gotten yields back to the midpoint, right around 293, 294. It's kind of the midpoint of that May range. And we're just kind of in that waiting period. The market now, people are saying, well, now they're seeing more of a bearish bias to bonds as equities take off. But I think right now the market's just sort of getting its sea legs back under it, and we'll have to wait and see what happens next week when we talk about all the central bank meetings, whether it be the Fed, the BOJ, the ECB, and likewise we've got inflation numbers. So there's a lot going on next week, not necessarily this week. So this is kind of a wait and see kind of a week. Look at market volatility. It's well off those highs we saw pre-employment as expected. And I think right now in the market, after what we saw last week with Italy and all the continued talk and Twitters for trade talks with China, whether it be with NAFTA or whoever it is, Europe, there's a lot of what ifs out there, but they've been talked about so long. I think the market is now starting to discount some of the jibber jabber that we're hearing online in the social media. And lastly, last week's big buyers of treasuries, we suspected it was leverage funds, hedge funds, so to speak, who come in and buy on a leverage basis, and they were getting squeezed out. And we were wrong. It was the asset managers, the real money accounts that were coming in. They were adding to their positions. They were long. They've been long all along. They added to those longs. And actually, the leverage guys took advantage of the bid to bonds, and they sold. So leverage accounts continue to get short. Asset managers continue to get long. This is going in opposite directions. This can only end well for one of the two sides. So I think right now, as we head into June FOMC, as we head into those other central bank meetings, as we get some clarity in Europe and with trade talks, there could be a shoe that drops here, and it looks like the leverage community could be the winners. But as we stated earlier, we're just at the midpoint of that May range, so we haven't really taken a side yet. I think we have to wait until next week before we see any real shift in the bond market. This is Todd Colvin coming to you from the floor of the CME Group.